My name is Primo, and today I'm going to be presenting a great technique that you can start using as early as tomorrow if you like. It's in what we feel at Specialist Trading is the right way to trade tops and bottoms. And as he just mentioned, my name is Primo. I am the president and founder of Specialist Trading. I've been trading for roughly about 37 years now, going to be close to 38 very soon. And what we do at Specialist Trading is we are first and foremost an educational company. We provide all of our students and our members with all the tips, techniques, and trading strategies that I've accumulated in my 37 years of trading. Now, even though we provide you with signals and with generated buy and sell signals from these strategies and techniques, we are more about teaching you or empowering you with all of this information so that you can ultimately make your own trading decisions for you. That's really what we're about at Specialist Trading. So before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some great performance results using this entry technique that I'm going to share with you for trading tops and bottoms. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. It's at SPCLSTTRADG. We post a lot of great free information on a daily basis, anywhere from daily financial wisdom to actual signals that we're currently in, from the S&P to stocks, even to the currency pair. So feel free, and I invite all of you to follow us on Twitter. Now, I just want to go over a little bit of philosophy about Specialist Trading. As I stated, we are an educational company, and a lot of people say, well, why do you focus so much on education? Why don't you just generate the buy and sell signals from your strategies? Well, a little bit of background. Once again, I started on the floor of the Pacific Stock Exchange, and I was on the floor for 16 years. 9 of those I was a specialist. And I traded through just about every market environment imaginable. I traded in the crash of 1987. I traded through the great bull market that started. And I know a lot of people think, well, boy, it's easy for you to do well and be consistent because you were on the floor and you were, had insight into things that the rest of us couldn't see. But actually, for the first year or two, I struggled tremendously, just the way most traders struggle when they first started trading. And I had already been trading for a while, but when I had my own post as a specialist, it was extremely, extremely difficult. I was doing all the things that I had been taught, that I had learned. At the time, I was going to a lot of seminars, buying a lot of books, and we didn't have chat rooms or trading rooms then, but we had newsletters, and I was subscribing to each and every one of them. I was following every news event, all the earnings reports on my stocks, and I had tons of indicators on my screen, and I just couldn't make a dime. In fact, I would maybe have 3 or 4 great months, and then the next month I would give everything back. And so there was no consistency in my trading. I was lucky enough to come in contact with my mentors on the floor. These were specialists who had been trading for a good 20, 30 years themselves. And they saw how much I was struggling, and they basically turned my way of thinking around, and that's what ultimately got me on the track to being consistent. And what they said is that, Steve, all these things that you're putting all this importance in, all the fundamental news, all the conventional wisdom that's supposed to work, how's it working for you? And it's, obviously I wasn't getting the results I wanted, so they said simply drop it. These things really don't work at all. They said the key to consistency is to keep your trading as simple as possible and to stay away from what conventional wisdom tells us what will work. It was very difficult for me to do in the beginning, but once I really got the mindset and was, not fearful of letting go of these things anymore, that's when I started to be consistent in my trading. And so I've been trading now nearly 40 years, and it's because of this, and this is what I teach and mentor to all of my students. Even though we provide them with strategies and we give them the signals that are generated, it's not about simply force-feeding you signals and telling you where to buy or sell. You won't learn anything from that. What our goal is to teach you how to trade with the specialist edge. It's really rooted in simplicity, and you'll see how simple it is going forward today. So that's our philosophy at Specialist Trading, and you'll see today how much attention to detail we give into teaching you how to trade on your own. Now, before we begin, I just want to state, since this is similar to a classroom, I will take questions, but at the very end. So if you have any questions, just kind of remember them, and then we'll get to them in just about 20 minutes from now. This won't be a real long educational presentation, and then at the very end, we'll get to all the questions and answers. Okay, so let's start out by sharing with you how most people trade tops and bottoms. And I'm not saying this to be arrogant or condescending. I'm really saying this from from firsthand experience because this is the way I used to trade tops and bottoms when I was in my first year or so. Okay, let's start out with stocks. I'm going to start out showing you some older charts, but towards the end of the presentation, we'll start looking at charts that are as recent as just a few hours ago. All right, so let's start out with this chart in Caterpillar. As we can see here, we have the stock price, and then below we have just a standard overbought, oversold oscillator. This is just your standard stochastic oscillator. And it doesn't matter whether we're using the standard stochastic. It could be anything. It could be anything that generates a so-called overbought and oversold condition. It can be another indicator, it can be another oscillator, it can be something you came up with. It doesn't really matter, just something that says the market is overbought or oversold. Okay, so the way you usually use this technique when tracking overbought, oversold is obviously when we get in the so-called oversold territory, which was displayed down here when you get below the oversold threshold, that's when you want to buy. So let's say you applied that and you went long Caterpillar and you have a nice trade here. You made some nice points right off the bat, and you wait till you get in the so-called overbought territory and you sell and go short. And now you've got a really nice trade. You got out at the top and now you're short and it's working fantastic and you think, boy, this is so easy. Now we're once again back in the so-called oversold territory. So the lines cross, so you jump in and buy again. You figure at this rate you're going to be a millionaire by the end of the month. But it doesn't go up. But that's okay. You have a nice profit from the first two trades, and we're still in the oversold area, and the lines cross again, so you decide to double up and buy some more. So this way, it doesn't need to go up that much further in order for you to break even and to start making a profit. So you double up your position, and guess what? It goes even lower. So you decide to triple up. This way, you're really going to make all your money back and more, and it goes up a little, but actually, it continues to go lower and lower. Does this look familiar to anyone? Okay, how about if you are an E-mini S&P trader? Well, the same concept will apply into that market as well. Let's look at a 5-minute chart of the E-mini. All right, we have the same overbought, oversold, stochastic on the bottom. Nothing has been edited, nothing altered, and we have a 5-minute chart. Now, looking at this, you have your overbought territory where you go short. It gets into the oversold territory, so you cover and go long, and you have a nice trade there. And now you have a nice trade on paper. You're getting ready to exit, so you sell your long and you go short. And you figure, boy, this is easy. I'm just going to do this all day long and rack up thousands of dollars a day. So you go short, and it goes a little bit higher. So you decide to short some more, and it goes higher until it goes even higher, and you lost everything you made on the first two trades. Once again, look familiar to anybody. Now this same phenomenon will transfer over onto the currency pairs. All right, so let's look at the Forex markets. We look here at a chart in the Swiss franc. Now we have the so-called overbought condition. So you want to short. So you sell, and it doesn't really go lower, but it doesn't go higher either. So you just kind of hold on the position. But then when it goes higher, you decide to double up. You don't need it to go much lower in order to make your money back. So you double up, it goes higher, you triple up, and now at this point, you've blown out your account, you have no money, you're hiding your statements from your wife because you've lost your entire account altogether by shorting the Swiss franc. And once again, you see how trading tops and bottoms has no consistency. Why? Because it's similar to a gambling mentality. Has any one of you ever gone and played the slot machines, either in Vegas or Atlantic City? It's the same concept. In other words, those machines will force feed you a couple of winners every now and then. So you'll get this false sense of security thinking that you're winning. But over time, if you've been at the slot machines for over 2 or 3 hours, you'll see that you're actually losing money. The majority of people lose money. The odds are not in your favor. It's the same concept when you're applying some type of overbought, oversold conditions. Why? Because this is what my mentors taught me. They said, Steve, there is no such thing as overbought or oversold. Now think about that concept. We've all been trained, we've all been taught, looking at all the books we've read, all the courses we've taken, the seminars, the webinars, that when something gets to be overbought, we sell, and something is oversold, we buy. And this is the way I was trained when I was coming up trading. But my mentor said, you have to get rid of that concept because there's no such thing as overbought, oversold. Okay? Any issue, any market can go up as high as it wants to. How long have you seen issues, equities or currency pairs or the E-mini stay in a so-called overbought condition for days, if not weeks or months? And the same thing applies to being oversold. Now, we've seen the equity issues that literally go down to zero. They go bankrupt. So there's no such thing. So the odds are not in your favor trying to pick tops and bottoms. So that's what they told me. They said, Steve, it really is a recipe for the disaster. It's a loser's game to try and do that. You will win every once in a while, but over time you'll end up giving everything back. And remember, our goal is to teach you to become consistent traders so that you can be trading 20, 30, 40 years down the road. We don't want traders to make a killing in the first 6 months of trading and then give everything back. There's no consistency to that, and we don't really, aren't really searching for that type of trading. We're more interested in having you trade for the long run. So I asked my mentors, I said, okay, if there's no such thing as overbought or oversold, then how exactly are we supposed to trade? And they said the right way to trade tops and bottoms is simply to go with them. So what does that mean, to go with the top or the bottom? Well, here's the technique I'm sharing with you. This is simply an entry technique. I know a lot of you are going to say, is this a strategy? Is this a full-fledged strategy or system you teach? This is simply an entry technique that you can apply to any type of overbought, oversold conditions. Okay? And what we're doing is we're going to exploit those so-called overbought, oversold conditions by going with them as opposed to trying to pick them or standing in the way of a speeding train. But remember, this is not a full-fledged strategy. I know a lot of you are going to say, well, where do I place my stop? Where do I exit? Those will all come with our strategies. All I'm giving you right now is an entry technique that you can actually apply to anything you currently trade with. All right, so let's go back and look at those charts once again. Here's Caterpillar Tractor we were looking at earlier, okay? And here's what my mentors taught me. They said the first thing you do before trading anything, it doesn't matter if it's a 5-minute chart or a daily chart like we see here, the first thing you do is apply a 50-period simple moving average. That's the first thing you have to do before you pull the trigger, before you have an idea of what you're going to be doing. And then you ask yourselves, where is price in relation to the 50-period moving average? If it's below, as it is in this scenario, then you're only going short. You will not even consider going long Caterpillar Tractor. So right off the bat, half your questions are answered. You don't have to think about, well, is this am I maybe picking a bottom or a top? You don't care. We're only looking to go short. But we still need some structure. We still need some setups. So this is where the overbought, oversold tool comes in. And once again, it doesn't have to be a stochastic. It can literally be any tool that generates an overbought, oversold condition. So since we're going short, we want to locate all of those so-called oversold territories right here, when the line crosses below the 20 threshold, I believe. And then what we want to do is locate all of the short-term bottoms, the pivot lows that were created while we were in these so-called oversold conditions. Because as you see here, here are some short-term pivot lows, but they weren't created in an oversold condition. We only want to take advantage of the ones that were created here. And once we trade anywhere from 1 to 3 ticks below those, we're simply going to sell. And you see now, where before we would have lost a lot of money trying to pick a bottom in CAT, now we have nothing but winning trades. Let's try this same concept again with the E-mini. All right, let's look at a 5-minute chart. Once again, first thing we do is we add the 50-period moving average. Obviously, price is above the 50-period simple moving average, so this means we are only looking to go long. So we're looking to go long the 50-period, looking to go long the E-mini on a 5-minute time frame. Since we're only looking to go long, we want to exploit the so-called overbought territories, circled in green. Okay? Once we get to those so-called overbought territories, we search for the tops that were created, and then we just want to exploit them. Once they trade 1 to 3 ticks above, that's where we're going to be entering. All right? Well, before, we really lost a lot of money trying to go short the E-mini. Now we have nothing but winning trades. And then lastly, we can apply to the Forex markets. Before I go into that, I think I hear someone else's mic. I'm not really sure. So if you can hear me okay, just kindly, I hope I didn't cut myself off on a mic. I'm hearing someone else, but if we can hear me okay, just let me check in the quick answer box there. It looks like it sounds good. Okay, great. I was just hearing someone else's mic. I didn't know if I had automatically turned myself off or something. All right, so let's go back to the Swiss franc, okay? We go back to the Swiss franc, and we see here that we have the same chart we had earlier, but now we've added the 50-period moving average. So we add the 50, and we ask ourselves, where is price in relation to that? Obviously, price is above, so this means we're only going long the Swiss franc. We're not even going to consider going short. See how simple this is? such a great tool to get you on the right side of the market. So since we're only going long, we locate the so-called overbought territories, circled in green, and then we just want to identify all of those short-term tops that were created in the so-called overbought territory, those little pivot highs. Once we trade above those by 1 to 3 pips, you simply jump in and buy. Now before, we had tried from right here to go short the Swiss franc all the way up and lost nothing but money. Now, all we're doing is going long the Swiss franc and we're making nothing but money. You see how simple this is? So let's look at, those are older examples. Let's look at some more current examples of how the same concept applies. And once again, we'll start off with stocks. All right, let's look at Amgen here. This is going into the first week in November. For the first part, we are above the 50. We kind of crossed a little bit for a week or so below the 50, but then we went back up above. So let's locate those so-called overbought and oversold conditions. And then once we found them, let's locate and identify the short-term highs and short-term lows that were created in the overbought, oversold conditions. So these are the short-term pivot highs that were created in green, and this was the short-term pivot low. Now you need those to trade 1 or 2 ticks above in order to go long or short, 1 or 2 ticks below. So since we never went short here, never went below this, we never got short, but since we went above, you see here we would have been long Amgen ever since 135 all the way up to another 20 points higher if you wanted. How about Apache Corp? Okay, obviously we're only going to be going short. Why? Because price is below the 50-period moving average. So right off the bat, the only way you would have lost money trading Apache is once again by trying to pick a bottom. That will work every once in a while. Take it from me, I know this is the way I used to trade. But on that 3rd or 4th time, that's when you're going to give everything back. So why even go there? Why not just try to be in sync with whatever market you're trading as opposed to trying to tell it it's going to stop at a certain level. So now that we know that we're only looking to go short, we locate the so-called oversold territory, and then we locate and identify the short-term bottoms that were created. Just a few of them, but you could have gone short all the way here, roughly around 90, 95, and ridden it another 20 points down, just from October all the way into November. Avalon Bay, we see here that this is an older chart going into September, but obviously if you had tried to short this stock, you would have lost a lot of money. There were a couple of places where it would have worked out, but you would have had to have been very quick and gotten right back in order to capture a quick gain. It would be much easier simply to know that you're going to be going long because you're above the 50, locate the so-called overbought conditions, and then simply go long once you trade above the short-term tops. So why, stress out and wipe the sweat off your brow for just luckily making a quick short trade when you could have just easily gone long at all these times when that short-term high was exploited. How about Barrick Gold? This also works on gold. You can also apply it to ETFs if you like, on gold ETF if you want, but obviously here in September we are below the 50-period moving average coming into the first week in November. So we're only going long, I'm short gold, I'm sorry, because we're below the 50. So we look for the so-called oversold area, then we identify the short-term bottoms, and then we simply enter once those bottoms have traded 1 or 3 ticks below those short-term pivot lows. And here's a great example of how you can switch gears simply by following the 50-period moving average. You see the first portion of this chart, we were above the 50, but then later on coming into August, into September, we crossed with consistent amount of price closings below the 50. So in the beginning, we're only looking for long setups, circled in green here with the overbought territory, and then coming into August, September, we're looking to go short. So once we traded above these little green short-term tops, we could have entered, and then once we traded below the red short-term lows, we could have entered to go short. So the beauty of applying the 50-period moving average is it gets you in sync with whatever market you're trading. You're on the right side of the market. And then the beauty of exploiting these so-called overbought, oversold territories is you're only going to go and enter once these short-term pivot highs or lows are exploited by 1 to 3 ticks. And let's look at the E-minis now, all right? We can start off by looking at a weekly chart of the E-mini. This is going back all the way back to 2012. Now, looking back to 2012, where has price been in relation to the 50-period moving average? Price has been above. So if you're trading on a midterm to longer term style of trading the E-mini? Well, obviously you've only been long this entire time, and you can transfer it over this into the S&P 500 because the E-mini is just a future of the S&P 500. So the market has been long. We've known on a weekly basis to stay long since 2012 if we're trading weekly charts. So we just identify the so-called overbought territories. We look for those short-term pivot highs on a weekly basis, and you could have looked at all these places to enter the E-mini on a weekly time frame. See how well you would have done as opposed to trying to pick a top in the E-mini? We haven't tried to pick a top at all in the E-mini. We're only looking to go long on a weekly basis. Now we can go to a smaller time frame. Let's go to an hourly time frame. This is a month ago in the middle of October. We crossed below in an hourly time frame roughly around the 10th of October, so we're only looking to go short. If we're looking to go short, we want to find out where the so-called oversold territories are, right here, and then we simply identify the lows that were created, and you could have gotten short as early as 1910, and that's a good 40 or 50 points in roughly about less than a week if you had taken just the first setup. Let's go to a much smaller time frame. Let's go to a 5-minute time frame. This is a couple of weeks ago. We are above the 50 period for all intents and purposes, so we won't exploit the so-called overbought area. We simply look at that area where those fine-tune those points where we're making a short-term top, and then we simply buy and go long right here. Okay? And we can take it down even more. Let's look at a 1-minute chart. This was last week. We're below on this time frame here. We've crossed below at this time right here. So look at all the time you could have gotten short to make a quick 5 points or so. Now, I know a lot of people look at charts that are maybe 6 months or a year old, and that's fine. We use older charts, but mainly for educational purposes. But I know a lot of you want to see this happen recently or currently, because what difference does it make if it happened 6 months ago? We want to see things that are happening currently using these techniques and strategies. Well, let's look at something that happened today. I made a snapshot copy of this just about 2 or 3 hours ago. This was a 1-minute chart of the E-mini. Okay, this was today right before the close. As you see here, went up roughly to about 12 o'clock Pacific time, so it was roughly an hour before I presented. And we asked ourselves, where is price in relation to the 50-period moving average? Well, for most of the part, we were above in this certain portion of the day. So we wanted to locate all the so-called overbought and oversold territories, and we found the short-term pivot highs and pivot lows, and there was no reason to go short because we never went below those areas where we have a red horizontal line. We would have gotten short if we had gone below that, but we never did. So all you did was go long. And look at all these buy areas you had trading a 1-minute chart of the E-mini. So all you E-mini traders that like to trade on an intraday basis, this is a great technique to trade. But remember, this is just an entry technique. We haven't talked about stop placement or exit or money management. And lastly, let's look at the Forex markets. This technique works amazingly because of the strong trends in the Forex markets. Here's an older chart of the Euro-Yen. We're looking at a weekly chart once again. Obviously, we're only looking to go long the Euro-Yen because why? We're above the 50. So if we're above the 50, whatever overbought, oversold tool we're looking for, we want to identify where the overbought conditions are. And then we just identify short-term tops. And then once those tops are violated by 1 to 3 ticks or pips in this case, we simply buy. And it doesn't look like a lot, but there's thousands of dollars you could have made here per contract by just using this technique. If we go to a smaller time frame, here's the euro dollar coming into November. Obviously, we're only going short. Why? Because we are below the 50-period moving average on a daily basis. So if we're going short, we identify the so-called oversold area, and we look for those short-term bottoms are created. So you think you could have made money on the euro dollar here this last couple of months. Most people who have lost trading the euro dollar have lost because they're trying to pick a bottom. Why would you try and pick a bottom? We're below the 50, so we're only looking to go short. So all we're trying to do is exploit what everyone, conventional wisdom, has told us is oversold. Remember, my mentors taught me there's no such thing as oversold, and there's no such thing as overbought. So 2 points to remember here before we go into any questions and answers, and I tell you about a great offer we have for all of the conference attendees today. Never, ever try to pick tops and bottoms. I know a good deal of you probably trade this way. Once again, I'm not saying this to be arrogant or condescending. I used to trade this way. I know exactly what it's like. I'm saying this from firsthand because I would have some great months or some great days trading this way, but then I would give everything back. And my mentors taught me, they said the key to success, which is really longevity, which is really staying in this career for 20, 30, 40 years, is to be consistent. It's not about picking tops and bottoms so that you have a big score here and there. It's more about being able to make these nice, consistent trades so that you'll be able to sustain yourself for 20, 30, 40 years. So if you don't want to do that, then try and pick tops and bottoms because you won't be able to sustain yourself. Once again, it's very similar to a gambling type of mentality. It's a recipe for disaster. But if you want to sustain yourself, never, ever try to pick tops and bottoms in whatever market or time frame you're trading. Once again, you have to get this mindset embedded in you before you start, because there is no such thing as overbought or oversold. I just showed you a ton of charts from things that are maybe 3 or 4 months old to what happened just a few hours ago, how the markets can go as high as they want to and they can go as low as they want to. So there's no such thing. It really doesn't make sense to try and pick a top or a bottom, because it really, you'll have sometimes that it wins and sometimes that it doesn't. But remember, we're looking for consistency. So before we close here and go into questions and answers, I want you to ask yourself a question. Do you think this edge or any one of the edges, actually I gave you a few edges actually today, could have helped your trading this past year? In fact, let's just take that edge of applying the 50-period simple moving average. I want you to do this as an assignment. Okay, I'm sure you didn't think you were going to get an assignment in a presentation, but go back and look at your last 20 trades, all right, winners and losers. I can almost guarantee that the winners and losers were because you were in sync with this simple tool. In other words, you were winning in your trades because you were buying above the 50 period or selling below, and most likely you were losing because you were out of sync with this simple rule. So go back and check your trades and see how well this technique could have helped you if you had known about it. Or what about the entry technique? What about exploiting the so-called overbought or oversold markets there? What if you were able to apply that? Do you think that would have helped your trading much more as opposed to just simply trying to pick a top or a bottom? Now, I just gave you a few edges today, just 2 very simple ones. What if I could give you 2 or 3 more? Or what if I could give you 5, 6, 7, 8 more? All right, totally different, but just as powerful in helping you to trade the markets. Well, I just want to take just a few seconds here to talk about a great offer we have for all of the conference attendees today, and this is our Secrets of a Stock Exchange Specialist training sessions. What this is a 3-hour video of a conference I gave in a couple of years ago in Denver, Colorado. I was asked to speak at a seminar where I was a featured speaker, and I spoke for roughly 3 hours. The beauty of that is that they recorded a really nice high-quality recording, and they gave it to us. And on this recording, I talked about many, many more high-probability trading edges. I didn't just talk about what I shared with you today. In fact, I didn't even talk about what I shared with you today. I gave about 7 or 8 more edges that are on totally different subjects, things that can elevate your trading just as well as the ones I presented today did. In fact, I talk about which indicators not to use. I tell you the difference between a system versus a strategy. I talk about the #1 chart pattern you should be looking for in virtually every trade setup. And I think most important, the most valuable thing of this 3-hour video tape is that I give you the complete rules to probably one of our best pullback strategies at Specialist Trading. That's strategy #1. It's probably our most consistent strategy for trading pullbacks. What I just shared with you was a technique just for entering, but it wasn't a strategy. Once again, it was just an entry technique that you can apply to a strategy. But with strategy #1 in this 3-hour training course, I give you all of the rules so you'll know exactly where to place your entry order, where to place your stop, and where to exit using this particular strategy. In fact, let me show you some current signals that were generated using strategy #1. These were all buy signals generated in raw stores at the end of September coming into just about a month ago. These were all buy signals. You see how on these small pullbacks here, the strategy generated a buy signal just almost at the very lows. Now, I know someone would look at this and say, well, I thought you didn't try to pick tops or bottoms. Well, according to the strategy generated that we were in an uptrend. Okay, so there was no reason to think that we were picking a bottom because we were buying a pullback in an uptrend. See, picking tops or bottoms only means that you're going against the trend. But we were in sync with the trend. We were simply buying or selling on pullbacks. Here's another signal in Fastenal just about 3 weeks ago or a month ago. As you see here, the strategy predicted that we were in a downtrend. So on this nice little pullback here of 3 bars, Strategy number 1 generated a sell signal, and look what happened after that. How about Netflix? This was also mid-month, about a month or so ago. It generated a downtrend in the market, so it looked for these two pullbacks. It generated two signals, actually, on the 7th and the 9th. And would you have liked to have taken advantage of that nice sell-off? And in fact, there was some news that had the stock gap down lower. Well, we weren't privy to any news at Specialist Trading. We just know that strategy number 1 saw that we were going much lower, and that all we did was pull back before the trend resumed lower. Now, these are stocks. We can also apply this to the E-mini. Once again, here's a weekly chart going back to the beginning of 2013, just about a few 2 years of trading here on a weekly time frame. And look at all the buy signals that were generated with strategy number 1, going up until just 2 or 3 months ago. And these were all weekly time frames. And remember, the strategy, it generates buy and sell signals, but in any time frame, in any market, and it also tells you where to exit and where to place your stop. We can also apply this to a 5-minute chart. This was a few weeks ago in the E-mini on a 5-minute. Look at all the sell signals that were generated every time we had a nice little bounce up here. Okay? None of the rules were changed for the market or the direction. And then lastly, we were looking at a chart of the Canadian dollar. These were all buy signals generated using strategy number 1. The good news is, in this Secrets of a Stock Exchange Specialist training session, we give you all the rules. So this is something that you can start using as early as tomorrow if you like, once you become a member. This is 3 hours of trading techniques plus the full strategy. Remember, it's an online video course, a live presentation where I spoke in front of hundreds of people in Denver, Colorado a few years ago. Now, we market and promote this on our sister site. That's Pro Trader Strategies. And this is actually sold for roughly $1,000. But because of our affiliation with the Investor Inspiration Online Training Conference and getting to know you, guess what? We're discounting this down to $37. So you get all this information, many more edges, plus the complete rules to strategy number 1, plus my personal email address. You can contact me whenever you want. A $997 deal discounted down to $37. Now, I know that's tremendously inexpensive. You probably spent more than that just today when you were on your commission basis. So if you see that this link here at the bottom, you can cut and paste this onto your browser, and that will automatically take you to the Pro Trader Strategies page where you can sign up for that. In fact, let me just post this link really quickly here. I can paste this and send this right now. If you look on your chat box, I just put the link there on your chat box. It should end where you say Primo. That's the same link. You can actually just click that on and it will automatically take you there. It's in your chat box right now. So you can either cut and paste it on the screen you see here below at the very bottom where it says 37 webinar offer, or you can go into your chat box right now and simply click that on and it will take you to that page. So for more information about this special $37 discount that we have, or any of the other techniques or strategies that we promote and I teach at Specialist Trading, please go to our sister site. That's Pro Trader Strategies. They market and promote all of my different techniques and strategies, and you can contact them by emailing any one of their trading consultants at trading@protraderstrategies.com, or you can call them directly, the number in front of you, at area code 310-598-6677. And you see just directly below that is the link you can cut and paste, and you can apply that to actually put on your browser and go to the link, or you can go to the chat box and you see there that's the $37 offer. Now I'm going to open up the question and answer period here and a portion of the presentation. I want to thank you for waiting, and let me look at some of these questions. Larry asks, why not buy the pullbacks of the current trend? Well, Larry, we do. We totally believe in pullbacks at Specialist Trading. In fact, the only two ways we trade are on consolidations within the trend and pullbacks within the trend. But if you really want structure to a pullback strategy, strategy 1 is the way to go. We really love strategy 1 because it's probably one of our best strategies for trading pullback. So if you want to take advantage of a great pullback strategy, and I just showed you tons of examples in different markets, I would highly suggest getting that $37 offer. Okay. Ed asks, what were the settings for the stochastics? You know, Ed, I don't even know. All we did was use a standard stochastic. As I said in the beginning, I didn't edit or alter anything, so all I did was go to the charting software and just simply click on stochastic. I don't, that's how simple this tool is. It really doesn't matter. All you need is something that gives you a so-called overbought, oversold. Why? Because we're exploiting that. Remember, since there's no such thing as overbought, oversold, we're going to exploit it. So if there's a high that's created in a so-called overbought territory, we're going to exploit it if it's violated. If there is a low created in the so-called oversold territory, we're going to sell that if it's exploited. Okay? Doesn't really matter. Remember, you can have any indicator or any tool that tells you the market or whatever you're trading is overbought or oversold. It doesn't matter. Since we don't believe in that, we're going to exploit it. It can be based off, price. It can be based off momentum. It can be based off of the tides of the ocean. It doesn't matter what it's based off of. Okay? Let me see here. I don't want to miss the questions here. They're coming up pretty quickly, so let me go back. Vern asks, as I said, what is your stop? Remember, Vern, I think I said this about 5 times. What I presented in this webinar was an entry technique. Okay? Just to simply, in order to have a stop or an exit, you need to have a full-fledged strategy. And as I stated in the very opening of the presentation, this was just an entry technique that you can apply to a strategy or build a strategy off of. Just an entry technique that I learned from trading on the floor that my mentors taught me. Now, if you want to learn a full-fledged strategy that has stop placement and exit, once again, I highly suggest you take advantage of that $37 deal. Okay? John is asking, how about some choppy markets, or choppy areas, you should say? That's great. The thing that's the beauty of using the 50-period moving average is that when you have a choppy area, what will happen is price will oscillate above and below that. Okay? And so it can't give you any clear-cut direction. We want to see anywhere from 3 to 5 closes either above or below that 50-period moving average in order to tell us what side to be on. We're not going to simply buy because we trade above the 50. This is not a strategy. It's just a trend directional technique. So if we're closing 3 to 5 times above, well, then we know now that we're not going to simply buy at the market. We're going to look for a setup structure, some type of strategy structure. That's what strategy 1 is. And we have upwards of 10 different strategies at Specialist Trading that trade pullbacks, that trade consolidation, different types of techniques. And I would say the majority of them all apply the 50-period moving average. So the beauty of it, that will keep you out of a lot of chop. Also the structure behind the strategy, what the strategy is based off of, either one lone indicator or perhaps some pattern recognition, that will also keep you out. But that's in the course as well. Andy asked for the exit of the position. Once again, Andy, that's in the $37 deal. Andy asks, is time frame for E-mini 5-minute or 1 minute and stock? Daily chart? Yes. Well, first of all, there is no perfect time frame. You can trade whatever time frame you want. The examples I showed in the E-mini were weekly charts, daily charts, hourly charts, 5-minute and 1 minute. And what the examples I was showing for stocks were daily charts. But this technique works in any time frame in any direction. And the same with strategy number 1 and all the tools I give you in the $37 course. Any market, any time frame, any direction. The best time frame to trade is the one that makes you feel comfortable. Never ever try to copy a time frame because somebody says that's their best time frame. Trade the one where you feel comfortable. There is no right or wrong answer in terms of time frames. Only the one that you feel comfortable in. I may love trading a 100-tick chart. Okay, that's very fast. You're going to get a lot of trades in that. Someone else may say that's way too fast. Okay, I want to trade a hourly chart. Great. Hourly chart may be way too fast. Somebody wants to trade a weekly chart. Okay, you're still going to get signals. It doesn't matter. All that matters is you have to pick a time frame that you feel comfortable. Remember, as I stated at the beginning of this presentation, our goal is not to simply force feed you signals. We want to empower you with this information so that you can make your own trading decisions. It's been estimated that upwards of 80% of all traders ultimately fail. And when we say fail, we mean that they lose all their capital reserved for trading. We feel this is because you're relying on either someone or something to tell you how to trade, what to trade, when to trade, either in some chat room or some trading room or on TV. That goes against our philosophy. We're trying to give you this information. We want to teach you and mentor you, but then we don't want to see you anymore. We want you to go on your own and, maybe come back for an occasional tuning, but that's it. You're a lifetime member for as long as you want at Specialist Trading, but most of our members stick around for 2 or 3 months, and then that's it. They're onwards to becoming consistent traders. So that's what we want. We don't want you to rely on someone to tell you what to do, someone to tell you what the time frame is you should be trading, someone to tell you what market you should be trading. We want to give you all this information, mold a perfect scenario for you so that you feel comfortable, and then set you loose on your own, okay? Let's see, question to Steve Primo. With your 50-period moving average and stochastics, where do you set your stop loss? Once again, we didn't have a stop loss. That was just an entry technique. I knew I was going to get a lot of questions on that, but it's okay. Does number 1 have arrows? Oh, Thomas, I believe, is talking about an add-on that generates buy and sell arrows. You know, Tom, you would probably have to contact the people at Pro Trader Strategies for that because they're marketing and promoting that. I know in the 3-hour presentation, when I go over all the rules, you know, that is a video online course that's yours to keep. And in terms of if they give you the upload for that, you'd have to contact them, okay? But once again, Thomas, it's extremely simple. I go over everything. It's not difficult to find out where the entry is. And so our whole philosophy is to keep things as simple as possible. You know, if you look at traders that have been trading for a relatively short time, 3 to 5, maybe even 10 years, they have extremely complicated trading plans. You know, lots of rules, lots of different ways to define what the market is doing, looking at one market to find out what the other one's doing. It's extremely complicated and subjective. But if you look at traders who've been trading 20, 30, 40 years, they mainly have maybe 4, 5, 6 rules at the most, and they're very simple. These are the guys who have found a way to sustain their trading. So this is what we teach. All of our techniques are very simple, and maybe 6 rules tops, and maybe 1 indicator at most, okay? Don asks, Stephen, how many strategies do you trade or teach? Well, I'll trade any one time, maybe 2 at the most, but I teach upwards of 10. We have courses for stocks, we have courses for the Forex markets, and e-mini courses. And each one of those full-fledged courses comes with upwards of 10 different strategies. But you can purchase and become members of Specialist Trading only if you just want to buy 1 strategy or become a member. You can, and our courses are as inexpensive as $400 or $500. So there's lots of ways to become a member. You don't have to spend thousands and thousands of dollars. And plus, you can get tons of great information on that $37 deal we're offering today. So there's a lot of great free information for you just alone in that. A few more questions here before we have to sign off. Well, why do you prefer the simple moving average and not the exponential? And why specifically 50? That's a good question, Mo. The reason why we use the 50 is it goes back to that adage, keep things as simple as possible. We don't want to say, well, if you're using or if you're trading an intraday chart, whether it be the E-mini, stocks, or Forex, we go down to a 20-period exponential moving average. But if you're trading currency pairs, weekly charts, or weekly or monthly stock charts, go to a 100 or 200-day moving average. Then if you're looking at dailies, go to 50. Once again, it's too complicated. We have found that a 50 works the best in encompassing all markets and all time frames. But please remember, the 50 is just a tool telling you whether you should be going long or short. It's not a strategy. It does not tell you to buy at the market or sell at the market. All it is telling you what side to be on. Okay? So it's really not that complicated, and it's not that detailed. So if you feel you must use an exponential, that's fine, but we really are trying to instill this concept in you is if price is below, only look for short setups, regardless of what strategy you trade. If price is above, only look for buy setups. If you do that, you're already on that road to consistency, okay? Ken asks, Steve, do you gauge support and resistance? No, Ken, we don't look at support or resistance for the simple fact that support and resistance is too subjective, in my opinion. One trader's support is another trader's resistance. There are, at Specialist Trading, we want things that are clear and cut and dry. We're 2 people. We'll look at the same chart and say, well, we're below the 50, so we're looking to go short. Whereas once you start looking at support and resistance, someone can say, well, there's support right here, and someone can say, no, but that's really resistance on a weekly chart or on a different time frame. You have to look at this. It's too many different answers. It's not cut and dry. We want things that are very definitive so that if you get 2 traders, they're going to come up with the same scenario. Whereas with support and resistance, we find traders coming up with 2 different scenarios, and that, in my opinion, is too subjective. There's too much discretion, and that won't get you on that road to consistency. Okay? So we don't really use it all, and by not using it, we've made things much simpler. Bud is saying, is it one-time access to the video, or can we save it on our computer? That's a great question, Bud. It's yours for life. You don't have to worry about this dissolving in 2 weeks or one time. You have to hurry up and study it. No, it's yours. So as long as you want, you can study at your own leisure. That's the beauty of this $37 deal. 3 hours that people paid to come see me speak that spent a good deal of money, it's yours for $37, and you can view it whenever you want. It's yours for life. So it's a tremendous deal. Someone's saying the address is gone. Well, if you look here at the page in front of you, if you're looking for the link, if you mean the link, it's directly in front of you. It's the very bottom link. You can just simply copy that down. I know we have the link posted on the chat where it ends with Primo, but if you can't find that on that box, simply look in front of you. It ends right here. It's the very bottom link. Just copy that and post that onto your browser, and you'll be able to go to that. Okay. Bill says, does strategy number 1 work on futures or only stocks? No, Bill works on everything and anything in any time frame, in any direction. In fact, I showed you a couple of examples on the E-mini futures on how well it worked. It works well on ETFs. It actually works well on commodities as well. We have some great short trades in oil as of late using this. It works on daily bars, tick charts, works on weekly bars. You saw examples in the currency pairs. So you can use this in any market, in any time frame. Steve asks, do you use or look at or use any smaller or larger time frame chart other than the time frame chart that you are trading? That's a good question. I think what Steve is saying is that, do I look at a higher time frame to help me to know what I'm going to be doing on a smaller time frame? No, I don't. Once again, that just overcomplicates your trading. Now, having said that, we have a lot of traders at Specialist Trading that like to use that technique. They say, Steve, if I'm below the 50-period moving average on the weekly, then I have to be below on the daily. Okay, that's fine, because you're not doing anything to drastically alter the technique. In other words, you're not bringing in some indicator we've never heard of or used, or you're not using some convoluted logic to find out what the trend is. That's fine. You're using one technique to justify the other that we use in our approach. So we see nothing wrong with that, but do we teach that? No, but we don't even suggest that. Because personally, I just trade the chart I'm looking at. When I tried to use that technique, I was taught that same technique on the floor. Oh, Steve, you should look at the daily to always tell you what you want to do on the hourly, and the hourly to tell you what you want to do on the 5-minute. Well, all that purpose that served for me was keeping me out of good trades. So I missed a lot of trades waiting for them to line up. So my mentor said, Steve, just trade the chart you're looking at. That's it. If you're looking at a daily chart, just make sure that everything lines up on the daily chart. If you're looking at a 5-minute chart, just look at the 5-minute chart. You don't have to look at these others if you don't want to, okay? I just want to take one more question because I don't want to take time from the next speaker. I know we're running a little late, and I started a little late, but let me just take one. Remember, you can forward any questions to the trading consultants right there. You can email them at the email address or call them directly at that phone number, but I highly suggest you take advantage of that short-term offer. It's only going to be there for a couple of days for $37. Max says, I bought this course last week and it was very good. Thank you, Max. Thank you very much. I'm sorry we don't have something new for you, but there's tons of information in there, so I'm sure you're getting a lot out of it. Thank you. Last question here from Steve. Steve, how many different markets do you look at while trading? That's a good question. I only look at one if I'm trading that particular market. So if I'm looking at the 5-minute chart, the E-mini, that's all I'm looking at. I'm not looking at currency pairs to trade or whatever, or stocks or another future, and vice versa. So I just focus on what I'm doing. Try to be attentive on the market you're trading, and don't overcomplicate your trading by putting all this other stuff in there, okay? Just focus on one market at a time. I have one screen. I'm not like these traders that have 10 screens in front of them. I don't have 5 phones in front of me. I don't watch any news shows or market shows. That's silly. You know, to me, that would be similar to a doctor in an operating room watching a soap opera on General Hospital. I mean, why get your information from that? You don't see doctors watching doctor shows on TV while they're operating. You shouldn't be trading watching CNBC or a market show. It's silly. It's only going to serve to complicate. Everything you need to know is in the chart in front of you. This is what my mentors taught me, and it was difficult and very hard to learn and retrain my mind, but once I did, I started going on that road to consistency. So if you're really struggling right now, if 2014 didn't turn out the way you wanted it to, I highly suggest for only $37 really take advantage of this great deal we have for all the attendees of the online training conference today.